ACA scenarios, show you how to input that detail into Intuit Tax Online, and review the results on the tax forms and worksheets. Please follow our new training forums for the latest updates, or you can click on the Resources tab to access these links and a PDF copy of today's presentation. So after our first set of ACA training, there was a lot of interest around showing you folks more ACA scenarios in the tax products. So here is a list of the various ACA use cases that I came up with and that we'll cover today. First, we're going to go through some basic penalty scenarios, then an advanced penalty situation. We'll do some basic premium tax credit scenarios, followed up with an advanced situation. We'll cover the marketplace granted exemptions, income below the filing threshold, and exemptions claimed on the return. Okay, first off, we have use case number 1, a basic penalty scenario, which was taken from IRS publication 5187. Jim, an unmarried adult with no dependents, did not have minimum essential coverage for any month during 2014 and does not qualify for a coverage exemption. For 2014, Jim's household income was $40,000 and his filing threshold is $10,150. And each of these scenarios, I do have the printed results here on the slides, but I'm going to actually go through the results in the product. So we'll go out to Intuit Tax Online here, and we're going to bring up use case number 1. And on the inputs, since there was no coverage and exemptions, I don't have any of the ACA screens filled out. So I'm going to actually just go in and check the return now. Click on tax forms, and we're going to go to the penalty worksheet. Okay, so we have Jim, and no exemptions and no coverage for the year. So we have X's across the board for each month. And then we're going to follow the flow of the IRS worksheet. For line 1, we're going to enter a 1 since we had an adult. And that also goes on line 2, 1s across the board. Nobody under 18, so that gets hit with a 0. And then on line 4, we're going to add them all up. And that's going to be a 1 across the board. Then the flat dollar amount, $95 per month for each adult. So we multiply 95, and we have that across the board for each month. Line 6 is the sum of the monthly amounts entered on line 1. That's a 12. That comes in later when we compute the amount on line 13. Household income, $40,000. The filing threshold is $10,150, and we're left with $29,850. Multiply that by 1%, and we have the $299. Line 11 says, is line 10 more than 285? And the answer is yes. So we multiply line 10 by the number of months for which line 1 is more than 0. And we're left with $3,588. What the IRS does here is first they gross up the penalty and then they divide it by 12. So we take the annual penalty amount, either the 1% of household income less the threshold or the flat dollar. We multiply it by the number of months where there is no coverage or no exemptions. And then down on line 12, we divide it by 12. So we bring the number back down. So in this case, the penalty is the $299. That's based on 1% of household income less the threshold, and that's greater than the flat dollar amount. of 95. Line 13 is the national average premium for a bronze level plan. And the IRS does some of the crunching of the numbers for you. So they take 204 and they multiply it by the number of months on line 6. And it also takes into account the number of folks in the household. That cap, or the upper limit of the penalty, is $2,448. So we're left with the $299, which is well under the cap. We go to the 1040, scroll down to line 61, and there's our ACA penalty of $299. Okay, next we're going to go to use case number 2, another basic penalty scenario from IRS publication 5187, and I modified it to show you different points of the computation. We have Eduardo and Julia. They're married, have 2 children under 18. They did not have minimum essential coverage for any family member for any month during 2014, and no one in the family qualifies for a coverage exemption. For 2014, their household income was $45,000, and their filing threshold, $20,300. Go back out to ITO here. And we're going to bring up case number 2. As far as inputs go, we don't have any coverage and we don't have any exemptions, so there are no ACA entries to speak of, but the computation is automated for us. We're going to go back to worksheets. Here we go, family of 4. We list out all the folks, and they have X's across the board. The IRS wants us to put X's in the months where there's no coverage and no exemptions. So for everyone in the household, they get X's across the board. Line 1, total number of X's in a month. So we have 4 across the board. And then on line 2, we have 2 members of the household who are over 18. So we put 2's across the board. Line 3, 1/2 the number of X's in a month for individuals under 18. The 2 kids were under 18, so we have half of the 2 equals 1, and that gets placed in each month. We total lines 2 and 3, and we have 3 across the board for each month. Line 5, we're going to multiply that number by 285. I'm sorry, by 95 times the 3, we get to 285. That's underneath or right at the 285, which is the flat number, flat amount cap for each month. Okay, line 6. We're going to skip over that because that comes in later on. Household income is $45,000. Filing threshold, $20,300. Net amount, $24,700. Multiply that by 1%. We're left with $247. Then line 11 says, is line 10 more than $285? The answer is no, so we have to go to the flat dollar amount worksheet. And as you recall, the penalty is based on the greater of 1% of household income minus the threshold or the flat dollar amount. And that's done on a monthly basis. So in this case, the flat dollar amount was greater. And again, the IRS grosses up the penalty and then they divide it by 12. In this case, $285 for each month, no coverage or exemptions, and the grand total is $3,420. Go back up to the main worksheet. That number gets entered on line 11, and then we divide it by 12 on line 12. And our penalty for the year is $285. That's underneath the cap of $9,792, which is the national average bronze plan. So that 285 figure, we can trace that back up to the 1040 on line 61. So in case number 1, we had the 1% of household income less the threshold winning out. And then in case 2, the flat dollar amount was greater. So it prevailed. Okay, use case number 3, advanced penalty scenario from the Treasury regulations, and I modified it just a bit. In 2014, taxpayers H and J are married and file a joint return. H and J have 3 children, K, age 21, L, age 15, and M, age 10. H and J's household income, $47,750. H and J's applicable filing threshold is $20,300. H and J have minimum essential coverage for January through June. No other member of the family has minimum essential coverage for any month in 2014. So we go back out to the product here. We're going to bring up use case number 3. Okay, now we're going to go to the health coverage screen. And this is the 1095B. So we have Harry and Jane. And in the example, we said they had coverage January, February, March, April, May, and then it stopped in June. And the kids did not have coverage. Go ahead and check the return. Going to go back out to the penalty worksheet. So for Kyle and Megan, they did not have coverage. And Jane also did not have coverage for the year. Harry and Linda, the parents, had coverage for the first 6 months, and then no coverage after that. So we come down to line 1 and put in the totals. So January through June, we're going to punch in 3s. That's the 3 kids who didn't have coverage, and then July through December would include the adults as well. So we're going to have 5s across the board. And then line 2 asks for the people over 18 from line 1. We're going to have 1s January through June because the oldest child was over 18, and then we're going to have 3s for the rest of the year because the parents come in. Line 3 is 1/2 the number of X's in a month for individuals under 18. We had 2 kids who didn't have coverage. So we take half of that, and we have 1s across the board. Grand totals on line 4. 2s January through June, and then 4s for the rest of the year. Line 5, multiply 4 by 95 for each month with a cap of 285. So we have 190 for the first half of the year, and then 285 after that. Line 6 is 48. Line 7, household income, $47,750, less the threshold, $20,300. Nets out to be $27,450. 1% of that is $275. Line 11, is line 10 more than $285? No. So we have to go down to the secondary worksheet, flat dollar amount worksheet. And this is where we take the greater of 1% of household income, less the threshold, or the 1%, or the flat dollar amount for each month. January through June, the 1% of household income less the threshold prevails. And then for the second half of the year, flat dollar amount prevails as the greater of the two. The grand total is $3,360. And that number flows up to the main worksheet gets entered on line 11. Line 12, we divide it by 12, and we're left with 280. It's underneath the cap of the National Bronze Plan on line 13. So our total penalty is 280 for the year. And that's going to flow up to the 1040 line 61, 280 bucks. Okay, next we're going to go to the premium tax credit. Use case number 4 is the basic credit scenario. And we took that from IRS publication 5187. We have Irvin, who is single and has no dependents. He enrolled in a qualified health plan with an annual premium of $5,000. The applicable second lowest cost silver plan premium, as shown on his form 1095A, $5,200. Irvin's 2014 household income, $28,725. Okay, we pull up scenario number 4. Showing screens with data. Going to go into health insurance marketplace. Irvin had insurance January through December, and that shuts off the penalty. And then we come down to the premiums of $5,000 for the year. Premium for the second lowest cost silver plan, $5,200, and no advance payments. Going to check the return. We're going to go to the 8962. So line 1, family size 1. Line 3, $28,725. Line 4 is the amount of the federal poverty line, $11,490. We divide line 4 into line 3, and we're left with 250% of FPL. That gives us an annual contribution for health care of $2,312 for the year. That goes into column C. Column A, $5,000, that's the premium. Second lowest cost silver plan, $5,200. The annual contribution amount, $2,312. We subtract C from B, and we're left with $2,888. That is less than our premiums in column A, so our annual premium tax credit is $2,888, and we had no advances, so our bottom line net premium tax credit, $2,888. We go out to the 1040, and that number comes in as a payment or a refundable credit on line 69, $2,888. Okay, use case number 5. Another basic credit scenario from IRS publication 5187. We have Brandon Talbot, who is single with no dependents and lives in Alabama. When he enrolled through the marketplace, Brandon was approved for advanced credit payments based on his projected 2014 household income of $39,095. The applicable figure for his household income is .095. Brandon enrolled in a qualified health plan. The applicable second lowest cost silver plan, $5,200, and Brandon's 1095A shows advanced credit payments of $1,486. Brandon's actual modified AGI for 2014 is $46,000, which is more than 400% of the federal poverty line for a family of one. Okay, we'll pull up use case number 5. Go to the inputs. And we'll find out that he got a 1095-A. He had coverage for the full year, shuts off the penalty. And then he didn't need to fill in these monthly amounts since they were all equal. You can just punch in the annual totals. $5,200 for the premiums and the second lowest cost silver plan. The advance payment for the year, $1,486. Check the return. Going to go to the 8962. And line 1, family of 1. Line 3 is $46,000 of household income, and that is 401% of FPL, federal poverty line. And consequently, he's not eligible for credit. So they want you to skip the computation, but they do ask for the annual advance payment of the premium tax credit, those upfront subsidies that he got, $1,486. And unfortunately, he's going to have to pay that full amount back since he was not eligible for the premium tax credit. And there's no upper cap on what he needs to pay back. So $1,486 is going to flow over to the 1040. It's going to come in on line number 46, excess advance premium tax credit repayment. Gets added into his taxes. Okay, the next one. Use case number 6, an advanced credit scenario from the regulations. Taxpayer E claims one dependent. F, E is eligible for government-sponsored minimum essential coverage. E enrolls F in a qualified health plan for 2014. The exchange for E's rating area projects E's 2014 household income to be $30,260. The annual premium for E's applicable benchmark plan is $5,200. E's monthly advance credit payment is $275. On October 1st, 2014, E loses his eligibility for government-sponsored minimum essential coverage. E enrolls in a qualified health plan that covers F for August through December 2014. The annual premium for the applicable benchmark plan is $10,000. The exchange computes E's monthly advance credit payments for the period September through December of $675. E's actual household income for 2014, $28,747. Okay, now we'll go out to the return. Use case number 6. First go to the 1095B, and we'll find out that Edward had coverage January through July. And then we'll go over to the 1095A, and we'll see that Felicia, his daughter, had coverage through the marketplace for the entire year. And then Edward got on board from 8/1 all the way to the end of the year to the marketplace. So the monthly premiums and the monthly premium second lowest cost silver plan was $433 January through July. We have some rounding amounts here at the end. And then when the dad got involved, included on the plan, it went up to $833 per month for the rest of the year. The monthly advances were $275, January through July, and then $675 for the rest of the year. We check the return. We're going to go to the 8962. Family size at year end, 2. Household income, $28,747. That is 185% of the federal poverty limit. The annual contribution for health care, $1,613, or $134 per month. That gets punched into column C for the whole year. As we said earlier, the monthly premiums and the monthly premium second lowest cost silver plan were identical January through July, $433 with a little bit of rounding. And then it bumped up to $833 per month to the end of the year. We're going to subtract column C from column B, and we have $299 for the first part of the year, and then it goes up to $699. It's underneath the cap in column A. So our monthly premium tax credit allowed $299 for the first part of the year, and then it goes up to $699 for the rest of the year. The monthly advances, $275 January through July, and then $675 for the rest of the year. Total premium tax credits in column E, $5,592. Line 25, the advances, $5,300. Consequently, taxpayer gets an extra credit, net premium tax credit of $292. We go to the 1040, scroll down, and there is the $292. Okay, now we're going to go through some exemption types. Use case number 8, marketplace granted exemptions. The following exemptions can only be granted by the marketplace and cannot be claimed on the return. We have members of certain religious sects, determined ineligible for Medicaid in a state that did not expand Medicaid coverage, general hardship exemptions, coverage considered unaffordable based on projected income, unable to renew existing coverage, AmeriCorps coverage. Marketplace granted exemptions do need to be reported on the return. They're not being physically claimed on the return, but they're being reported. You can look in the 8965 instructions for a full set of exemptions. Okay, now I'll show you how this first type of exemption works in the product. We're going to go to this first miscellaneous ACA screen. And at the top here, we're going to say Edward and Pamela are claiming exemptions for the full year. And they're going to punch in their exemption certificate number that they would have gotten from the marketplace. Go to the 8965. And that data carries into part 1, marketplace granted exemptions, and they're basically looking for the ECN, exemption certificate number. And it's going to turn off the penalty, obviously, for the year, since they were exempt. Okay, now we go to number 9, use case. The exemption for income below the filing threshold. If you're not required to file a tax return and don't wish to file a return, your tax household is exempt from the shared responsibility payment, and you don't need to file a return or do anything else to claim the coverage exemption. If your gross income is less than your filing threshold, but you do file a return for any reason, please use Form 8965 Part 2. So that caption came right off of the 8965. Go to use case number 9. So for this household, they have wages of $20,000. And they didn't need to make any other entries. We're going to check their return. We're going to go to the 8965, not Part 1, but Part 2. Are you claiming an exemption because household income is below the threshold? Yes. Same thing for gross income. There's some distinctions between gross income and household income. It's automated within the product, and you can find that distinction in the 8965 instructions. So then we go over to worksheets, and you'll notice that the penalty gets shut off in this case because they're exempt. Okay, use case number 10, exemptions claimed on the tax return. We have a pick list for most exemptions. The short coverage gap exemption is automated. That's where you have less than or equal to 2 months or of no coverage or other exemptions. And you can have only one short coverage gap for the year. Okay, we have Edward. He is going to have coverage January through September or October, and then no coverage November and December. We're going to go down to this next section here, Part 3. Pamela, we're saying, and here's the pick list that I was talking about. You can have exemptions to claim for unaffordable coverage, citizens living abroad and certain non-citizens, members of healthcare sharing ministries, members of Indian tribes, incarceration, aggregate self-only coverage considered unaffordable, gap in coverage at the beginning of 2014, gap in CHIP coverage, resident of a state that did not expand Medicaid, limited benefit Medicaid and TRICARE programs that are not minimum essential coverage, and finally, employer coverage with non-calendar plan year beginning in 2013. So Pamela chose option C for January through June. Go to the tax return, click on 8965. Nothing in Part 1, nothing in Part 2. And we have Edward had a short coverage gap, November and December. He had coverage for the rest of the year. Pamela had exemption C from the pick list, January through June. So we'll just go over to the penalty worksheet. And we'll notice that Edward does not get hit with the penalty. He had that short coverage gap. So he's exempt for the last 2 months, and then he had coverage the rest of the year. Pamela had an exemption claim for the first half of the year, and then no coverage and no exemptions for the last half. Consequently, she's going to get hit with the penalty for the last half of 2014. Run through the math, it's going to be $149. Just to point out some ACA Online Resources. We mentioned these in the prior webinar for ACA. We have some Intuit resources. The IRS website explains tax provisions of the new healthcare law, and then also links to healthcare.gov, Small Business Administration, and Department of Labor.